Welcome back to Cattle Call, a production of the Nebraska Rural Radio Association and brought to you by Wolf Auto, small town strong. Today, I am joined by Brad Kooima of Kooima and Varilek in Sioux Center, Iowa. Brad, as always, thanks for joining us.
Oh, absolutely, Rob. Well, thanks for having me again, and I'm looking forward to our, starting off here. Who says we need Chad? Right, we got this.
Who said we need Chad? Leave your opinions in the comments after today. No, I'm kidding. But as we kick things off today and look at this past week in trade, a bit of sluggish trade, what stands out to you and what external factors do you think have had the most impact?
Well, the cash, I think that's a good place to start. I thought that we kind of limped into the end of the week last week, Rebel, on the cash market, where personally I had some cattle that we sold at 233 on Thursday and then sold some more cattle at 231 on Friday. Incidentally, those cattle that we sold on Friday actually went on Monday, and they went a long ways, a Texas address where they got slaughtered. So that's kind of curious. I'm just throwing that out there because I'm going to follow up with that on that listener question that we had a little bit later on here in your program. So we kind of came into the week with a little bit of a weaker undertone, and the front months of the futures, I thought, really reacted to that. Yesterday, for some reason, there was a tremendous amount of fun buying, and I think it was the end of the month. Then I think today had the beginning of the first of the month, where some of these formulas and some of these AI-driven funds seem to buy it almost in spite of what some of the fundamental news is. I guess I had no explanation why feeder cattle futures were $5 higher yesterday, nor did I have one why they were even $3 or $4 like they were for today. They didn't last that way, by the way. So I thought that as the cash is transpiring now today, it's a little early on a Wednesday, but there's been a little bit of light trade in Kansas at 233. That's 4 lower for them. There was a little bit of trade early here at 360 in the meat, and that's lower. But the bids actually in the north are firming up a little bit. There's been a little bit of 230 traded to a couple of the majors I know, which is a little softer, but at least it's not maybe quite the train wreck that it felt like it maybe was going to be here earlier in the week.
It's definitely. Well, there's some headlines we'll dig into later in the program, but first we'll address this week's listener question. They asked if Texas can't import Mexican feeders, when will they face a major shortage? And they were also curious why Australian beef prices are so low. Is that due to oversupply or other factors?
This person's talking about a couple of the big macros, and particularly the first part of his question in terms of the Mexican feeders. Okay, so this is 10 months, 11, where we've had almost no, for just a brief couple of days there where they reopened it and then they closed it again. Somewhere probably conservatively around 700, maybe as many as 800,000 cattle that would have been placed mostly into Texas out of Mexico that haven't been. When will they face a shortage? Now. It is now. And been extremely tight here now for a few months already. When you're looking at record low placements for 10 consecutive months in Texas, that just doesn't happen without creating a big hole in the supply of cattle. So what has happened to a degree, two things really. One is what I mentioned a little bit at the beginning of our program, where they're importing cattle. It seems a little extreme that you would take them all the way from Iowa, pay the freight, and kill them in Cactus, Texas. But they all are doing that, pulling cattle out of Kansas down there, pulling Nebraska cattle down into Kansas. So that's part of what they're doing about it. The second thing that they're doing about it is they're feeding cattle to record weights. So less cattle, trying to create still more beef supply by making them bigger. Makes sense, particularly in that southern region. The carcass weights are way, way, way above a year ago and way above what's average for them. They're slightly above a year ago here in the north, but not with the drama that they have there. So it's real. It's part of the reason the market's as high as it is the answer to the first part of that question. The second one about the Australian beef is kind of interesting. We haven't talked much about the Australia deal for a while, and it's because, so what happened here, to give you a little background, this is truly, I believe, a supply demand, pretty straightforward situation. I'm fighting back a sneeze, I apologize. You went a couple of years ago, you had back-to-back mega droughts in Australia. I mean, it must have been unbelievable because they took their herd size down, and we ate a lot of Australian grinding type meat out of there. I remember people worried about that. Well, how come we're getting so much imports from there? Because they were liquidating their herd because of extreme drought. Well, thankfully for them, things changed, right? And so now they've got their herd rebuilt, and now they've too many, not enough. Too many, not enough. I mean, isn't that kind of what the market's all about a little bit? So now, that's I think that's a significant part of the deal there, that they've got their herd rebuilt to the point now where they're in much better shape than they were. I'm not sure that they're extremely low historically, but they are lower than they were a few years ago when they were experiencing that big drought, Rebel.
Most definitely. Well, we're going to take a look at a few headlines this week. Of course, the FDA just announced that they've granted emergency approval for a new formulation of Dectamax to be used to treat the New World screwworm, which we know has had quite a bit of influence on the cattle markets here recently. What do you think the introduction or the approval of this drug will have on things moving forward?
Well, Rebel, I'll be the first to admit it's lucky that you and I didn't do this show at 8:15 this morning, because I thought, well, this is going to provide a doorway. This is going to provide a path for them to say, hey, we know how we can successfully treat screwworm with this Dectamax product, and therefore we're going to open the door and we're going to resume feeder cattle imports. And I guess in my heart, I still think that that's the correct reaction. That was not the futures reaction. However, we did open quite a bit lower, and then we come flying back. Although, as I'm sitting here, we're down over $2 on the front month of feeders now. So maybe it's just taken a little while for the market to figure it out. But to me, there's a couple of things in play here on this Mexican border, and I know there's an awful lot of politics involved. But I'm of the view that it is not going to stay closed. There is a yelling and clamor from people in Texas to get it open because of like that listener's question. I mean, this is a huge deal when you're 80% full. I mean, in a state that depends on that fed cattle industry. I mean, it's a big deal to those people. So, there's two things that I think would help to control it. One would be, I mean, I've said kind of sarcastically that, we're not where we were in the 1960s when we had it the first time. There has been massive advancements, I would think, in treatment, right, of anything, right, especially and including this. So I got to think that there's going to be some sort of a treatment course here that they're going to finally settle in and dare to trust. The other thing, of course, is colder weather. I've heard a couple of things, ground temp of 46, air temp of 40, different things like that would, naturally cause the screwworm thing to slow down. So I've been more inclined to think that the deferred feeder cattle would have more pressure from this, Rebel, but that has not been the case. The weakest thing right now is up front. People kind of go like, well, these feeder cattle, they're never going to break. There's not enough of them. It's not going to. Oak City was down $10 to $20 today. Okay, so I mean, we can come off of these kind of levels a little bit.
Most definitely. Well, we were talking a bit prior to recording about the government shutdown. And of course, we've been operating the past week or so with that as a looming threat. And now that has gone into effect. How do you see that impacting the market? You mentioned that maybe it has a bit less influence than it maybe once would have.
Oh, for sure, Rebel. A couple of years ago, and 5, 6, 7, 8 years ago, that would have been, we'd been talking about, we're a couple lower, and that's why, kind of a deal. I mean, I don't even have the S&P futures lower here anymore. They've turned around and are now trading higher. And in fact, S&P futures are knocking at the door of all-time highs here. So, the vibe that I thought we were getting yesterday and the day before was that that it wasn't going to shut down at all. At least that's how the markets were kind of trading, like they weren't worried about it. And now I guess my reaction would be that the markets are trading like, well, they won't keep it closed for very long, so we won't really truly disrupt this economy to any large extent. And so I think we'd have had a worse reaction had not that. That seems to be that the market's content with the idea this is going to be a short-term deal and hopefully not amount to a lot. Now, there is a few other little curious things out there. And we never talk about this, thank goodness, because I don't want to trade gold and silver futures. But gold is making all-time highs today. I mean, what's up with that? the old guy in the room would say, well, if gold's higher, that usually is a flight to quality, we'd used to call it, so where is that investor going to go with his chunk of money when he doesn't know where to go with it? Is he going to go to the American dollar? That was real popular for a long time. That's a safe place. Maybe not so much anymore. Is he going to run into the stock market? Well, that they've been doing that. Or are we worried about another round of inflation again? So we're going to tuck it into the gold thing. So it'd be something to watch. I don't, like I said, I just am not traded, but how can you know? And, you can't ignore something when it's doing something that's never done before either.
Yeah, most definitely. Well, as we close out our time today, give us a preview of the week ahead and what you foresee for cash trade.
Okay. I'm, people tease me. They like me better when I'm bullish, right? And so do I. But I'm not really quite there right now. There's a couple things in play here. I think a softer cash market, a flipping of the basis. Basis is the difference between futures and cash. For a year or more, we had a steep discount, futures under the cash, and highly incentivize the producer to keep selling cattle, stay current. As I sit here right now, the October cattle are slightly above what we can get for cash cattle here where I sit today. So delivery starts next week. I don't know that we'll get any, but it wouldn't surprise me. So, and then the weakness in the spreads. So basis and then the spreads, the weakness in the spreads where the front months are the weakest up there. That's not a great sign overall for if you're a commodity trader anyway. That's one of those red flags that you watch for. So I hope I'm wrong, but my feeling is that the box beef probably isn't cleaned up here yet. Packers got himself a little bit of leverage because we're not quite as current as we had been for a while in the north. And I think maybe we do what we not unusual to do for us, and that we stay a little bit sloppy here moving into October, and then hopefully sometime in November we get cleaned up a little bit, and then we take the market back to what I think we got a chance to go to new all-time highs again in the first quarter of next year. But first of all, we need to clean up the few cattle that we got sitting around, Rebel.
Very good. Well, Brad, of course, we always appreciate your commentary. For folks who would like to get in contact with you, go ahead and give us your contact info.
Well, kkbtrading.com, easy short one. You can find us, but we'd rather have you call. The number is 712-722-0023, and you can talk to me or any of the other three brokers and my partners that are here.
Fantastic. Well, once again, that's Brad Kooima with Kooima and Varilek in Sioux Center, Iowa. If you enjoyed Cattle Call, make sure that you are subscribed. And if you have a question for Brad, feel free to leave that in the comments and we'll address it next week. That'll do it for this week's edition. We'll catch you next time.